I've been a huge fan of Warren Buffett ever since I got into investing 10 years ago, so I have to say I was pretty shocked when I read reports coming out that he had engaged in privately trading the same stocks as Berkshire Hathaway. A report came out by an investigative journalist non-profit called ProPublica, which details how Warren Buffett privately traded in stocks that Berkshire Hathaway was buying and selling. Some of the things alleged in the reports are pretty damning, especially against someone who has built a reputation for trust and ethics across essentially his whole career. And because of this, I want to take this extremely seriously and go through the report, the allegations, and see what this means for Buffett going forward. As Warren Buffett says, it takes 20 years to build a reputation and 5 minutes to ruin it. And let's hope for his sake and his millions of almost die-hard fans that he hasn't done something stupid and burnt his reputation that he spent so long building up. So here's the report from ProPublica. How Warren Buffett privately traded in stocks that Berkshire Hathaway was buying and selling. So it says, Buffett has long said such trading would be a conflict of interest and Berkshire policies prohibit it. But confidential records show that on at least 3 occasions, he sold millions of dollars of shares in stocks that Berkshire was trading. So we get into the report. It was the kind of endorsement most companies dream of. Berkshire Hathaway CEO Warren Buffett, the legendary investor known as the Oracle of Omaha, repeatedly sang the praises of Wells Fargo in an interview with Fortune. The bank, Buffett said, has come closer to an effective business model than any other big bank by some margin. He detailed the ways in which Wells Fargo was more valuable than it seemed and compared its chair to Walmart founder Sam Walton. They said it was Buffett who proposed the idea that turned into the $250 billion federal bailout that propped up American banks, including Wells Fargo. But at the same time, Berkshire was already one of Wells Fargo's largest shareholders, and Buffett was so influential that it caused a 20% plus jump in Wells shares the previous month, simply by Buffett expressing confidence in the bank on TV. After the Fortune interview appeared, a similar pattern ensued, and then by April the 24th, Wells Fargo shares had jumped 13%. That day, Buffett privately, so no one knew about it at the time, but so privately sold off $20 million worth of Wells Fargo shares in his personal account. So the big question is, why did he sell? There's 2 potential reasons on why he did. One is the more cynical one, where you could argue that it's a pump and dump. He said, well, this is an amazing bank, it's safe, it's sound, it's got a good future, and then he sells 4 days later and he makes a profit. That's the cynical way. Or, which, because I am a Warren Buffett fan still, and I want to look to the good of things, or he just sold because he saw opportunity in another stock. And guys, it was 2009, there was a lot of cheap stocks, so maybe he just saw a smaller company that had a lot more potential. So it's a bit iffy there. It has long been known that Buffett keeps a personal stock portfolio, separate from his company holdings, but what's inside of it has always been a closely guarded secret. Buffett's hand-picked biographer, Alice Schroeder, told ProPublica that he gave her access to nearly everyone and everything in his life, except his personal investing records, which is kind of fair enough. You'd want to keep your personal investing records personal, especially if you're a guy like Warren Buffett with so much money and so much influence. Over the years, Buffett has been unequivocal about one aspect of his personal portfolio. He has repeatedly said he steers clear of trading stocks that his company is trading. He said, I can't be buying what Berkshire is buying. Doing so, he stated on another occasion, would pose a conflict of interest. If he buys a stock before Berkshire does, for example, he could be enjoying a better stock price than his shareholders, since a big stock purchase by Berkshire will tend to increase its price. But roughly 2 decades of Buffett's personal trades were included in a leak of IRS data obtained by ProPublica. Those records show that the nation's best known and most respected investor has sometimes said one thing in public and done another in private. And this is a big thing that people are questioning about, like, Buffett, you've always been considered a man of integrity and sticking to your words. So if you say you're not going to be buying the same shares of Berkshire, why have you done it? Was it just because you thought you'd never get found out, because you never thought there would be an IRS leak? What was the reasons? This is what people are worried about. On at least 3 occasions, Buffett has traded stocks in his personal accounts in the same quarter or the quarter before Berkshire bought or sold shares of the same companies, doing so before the conglomerate's move were disclosed to the public. These trades may violate Berkshire's ethics policies, authored by Buffett himself, which require all actual and anticipated securities transactions of Berkshire's be publicly disclosed before Berkshire employees can trade the stocks personally. In February 2012, Buffett was asked on CNBC why, despite his praise of JP Morgan Chase, Buffett did not invest in the bank. Buffett said, "I'll let you in on a little secret. I own some shares of JP Morgan." He explained that because Berkshire didn't own any shares of the giant bank, it's one that I can buy without having any possible problems about conflict. But it turns out that he actually did own another bank, which was Wells Fargo. The question came up a second time at a Berkshire shareholder meeting this year, and Buffett gave almost the same answer. He said he preferred Wells Fargo, but Berkshire was buying Wells Fargo stock, and that takes me out of the business of buying Wells Fargo. So he bought shares of Chase for his personal account because it was his second choice. He said, "That's one of the problems I have. I can't be buying what Berkshire is buying, and I've got some money around, and therefore I go into my second choices or into tiny little companies." Only a year earlier, the issue of personal trading had given rise to a rare scandal for Berkshire Hathaway. Buffett's heir apparent at the time, David Sokol, resigned under a cloud after making personal stock trades, which Berkshire ultimately determined had violated its insider trading policy. Berkshire is a sprawling conglomerate worth $300 billion in 2022 revenues that wholly owns some businesses and has stakes in a number of publicly traded companies. Sokol, who denied his trades were improper, had purchased shares of a chemicals company that Berkshire acquired soon after. So essentially the guy had insider information that Berkshire might buy the stock, and he could make a little profit by buying the stock before Berkshire acquired it. Buffett distinguished between an employee long holding a stock that Berkshire then invested in, which he defended, and making a move in a stock about the same time Berkshire did, as was the case with Sokol. Buffett was asked if there were other instances of anyone at Berkshire trading in a way that might create even the perception of potential front-running, the practice of investment managers trading stock with the knowledge that their employees were planning to trade the same security. Buffett said, "I've never seen it. I have no evidence of it." The report then goes on to say that in October 2012, Buffett made another noteworthy personal trade. Over several days, he sold $35 million worth of Johnson & Johnson shares. At that point, Berkshire had effectively revealed that it too had sold J&J shares. Which, to be honest, I don't think there's anything wrong with that. You sold out of J&J, then Berkshire, your company, sold out of J&J. What's wrong with that? You're both selling. It's not like you've done any manipulation. So I don't see anything wrong with that particular trade. In another instance, in August 2009, Buffett appeared to move in his personal portfolio in the opposite direction of Berkshire's portfolio. He sold $20 million of Walmart stock in his personal accounts, even as Berkshire almost doubled its stake, which had previously held steady for 15 quarters. So he doubled during the same quarter. It's unclear which transaction came first, but no matter the order of events, it raises the question of why Buffett made one choice for his own portfolio and the opposite choice for Berkshire investors. And if he knew Berkshire had or was considering making a move and still traded, Buffett again risked violating his own insider trading policy. So the report essentially alleges that Buffett made 3 trades in the same stocks that Berkshire Hathaway was selling and buying. Now, for the Johnson & Johnson and the Walmart ones, I don't really see anything wrong with it. Okay, J&J, I explained why I don't see anything wrong with that one. And then Walmart, well, he sold. Maybe he sold because he had some other investments that he personally or privately wanted to buy. And for Berkshire, he just thought it was better just to hold on to those shares. I don't see anything wrong with that. I don't see any manipulation or pumping and dumping. The only thing that worries me is he said that he shouldn't be trading in the same stocks that Berkshire Hathaway is trading in. Like, he got asked that question by the CNBC host and by other people, and he said, no, I shouldn't be trading in the same stocks. And maybe he just thought he would never get found out by it. I'm not sure what he thought. Maybe he's got a decent excuse, I'm not sure. But you know, but Berkshire Hathaway have owned Wells Fargo, it says, since 1989. So clearly, you know, they've owned it for a long time. So Buffett shouldn't have been buying privately into Wells Fargo, but he did. And I don't know the reasons why. You know, we really need to ask him and see what he says. He might have a legit reason, but to say one thing to the public and then do another thing privately when you think you're probably not going to get found out, but now a leak comes from the IRS and it turns out that you had been doing such thing, it's not a good look for Buffett. But I just want to hold off on casting judgment until I see what Buffett has to say, because I still do trust him. I have a lot of trust for him, and I just want to see what he has to say. At the end of the day, I don't think it's the worst thing. He hasn't done any. Doesn't seem that he's done any pumping and dumping or illegal insider activity or anything, you know, very morally wrong. It's just, you know, it's just that little thing. You should not be saying you're doing one thing and then to do another. That goes against his ethics and what he's been preaching. So I'm not going to cast judgment until I see what Buffett says.